All right, we're back for another episode of the Mortgage Show. Chris Bedard, how you doing?
Chris Bedard is good. How's Randy?
Doing good, pal. It's been a wild freaking few weeks in the mortgage industry. We'll get to all that stuff, but before I do, last episode we had Chris George on, and I thought that was
Yeah,
awesome. What'd you think?
I really enjoy it. I think he's like fascinating, isn't he?
Yeah,
His energy levels, what he's trying to accomplish at this point, what he's accomplished. He's such a nice human.
yeah,
Great to talk to.
totally. I can't believe he can carve out 45 minutes for us, to be honest with you. Like knowing all of the stuff that he is involved in, the presidents of these mortgage associations, the testifying in front of Congress, the buying a bank, the fact that he can carve out 45 minutes in his day to just have that conversation with us, I think is really cool. And it's much appreciated by me.
Seems like he actually really enjoys it too, doesn't he?
Yeah. Yeah, it was a great conversation. I think anyone that listened to it that I talked to, had a hard time not really liking him. Yeah. Seeing why we are so happy here at CMG.
Yeah, I think his key is he's just a nice human being.
Yeah.
It basically comes out in every conversation that I see him have.
Yeah. So that was really cool. Hopefully we'll have him on again, but it's always fun having him on. I'm glad he's came on for a second time now. So he's a regular at this point.
Regular of the pod, let's go.
Is that Tatum in the background or what?
Tatum's in the background. I'm hoping Tatum's not going to start making all kinds of noises just randomly.
Well,
So,
Mason was just barking stuff. We'll grind through it.
yeah, we'll see how this goes.
Mortgage industry. So I want to
Yeah.
paint a picture. Want to paint a picture here for anyone that's listening. I would say 3 weeks ago we were riding really high in terms of interest rates being pretty low. The conversation around rates was like how low they were, how low they were going to go. It was generally a positive feel. There was a lot of people evaluating refis, and we're like, it's going to be an awesome spring. Fast forward 3 weeks, we have a war going on. Oil prices are kind of going high. The mortgage bond market is freaking out, and all of a sudden rates are freaking terrible. And we've already had two reprices today on Friday. We're going to post this next week, but we're recording on Friday, March 20th. And it's just been a freaking crazy 3 weeks that I could have never seen coming. What are your thoughts?
It's interesting because it's like typically bad news is good news for mortgage-backed securities.
Mhm.
A war is not a good thing, right? So when we actually went to war, immediately I thought in my mind, okay, bad news here. This is going to be great for mortgage-backed securities. It's going to make interest rates lower. It's been the exact opposite, which is there's a couple technical factors that kind of caught me off guard when that happened. Researching why it went the way it went. Dude, I feel like I've missed the mark on everything I've thought I've known the last 5 years of the flow of money within the market. The more riskier investments, and usually when things aren't going well, they go into mortgage-backed securities, and it's
I used to think that too, but I feel like we have been consistently proven wrong on that over the past 5 years. Like you said, the things that we think are going to drive the market a certain direction just don't necessarily work out that way. In this case, this bad news being good news for mortgage rates. Like you see the stock market drop 1,000 points in a day, or the Dow drop 1,000 points in a day. You're like, oh, great, this is awesome news. Because rates move inversely to the stock market. Nope, no, not at all. Not this time. It's kind of like a double whammy to see all the investment accounts drop for everyone, but then also interest rates rise. It's just a double kick in the guts.
so like, where's the money going is the question, right? Money flows out of stocks. Typically, it's going into bonds. Things are great for us. So where's the money going? Wanted to share a conversation with you. I texted you before the show about some stuff Uncle Tony taught me, and basically a little bit of the uncertainty in the bond market or the lack of money flowing into it. Um, a lot of investors were putting money or hedging the fact that the price of an oil of barrel was going to go down.
Mhm.
And obviously right now it's shooting up. So what happens? Well, these guys have to start paying their margins. And where do they get their money? They took a lot of it out of bonds. So, dude, hopefully this is temporary. I don't want another environment where we're like wondering if rates are going up half a point a day. It's not a fun time to be a lender when that's the case.
I caught someone last week where we agreed on the pricing, and as I'm hanging up the phone, I get an email saying that pricing suspended, pricing market's deteriorating, which is it's either deterioration or improvement. Improvement means rates are getting better. Deterioration means they're getting worse. I was like, you gotta be kidding me! I just had this tough conversation with a borrower, and then you find out that pricing that you just talked about with that borrower is no longer even available. You have to go back and be like, trust me, This never happens, and it doesn't really happen that often. Like pricing usually comes out in the morning for interest rates.
Yep.
Late morning, lunchtime, something like that, and that's what it is for the day. And they'll reprice the next day. But when things are extra volatile, you'll get some price adjustments in the middle of the day, and we've been getting those all the time over the past couple of weeks. Another one today.
I was looking at the chart. We've had a consistency of maybe 50 to 65 basis points trading for 6 months now. So as a loan officer, that's just really easy for us to look at a rate sheet. Borrower takes a couple days of hemming and hawing. It's probably still going to be there. But to Randy's point right now, 10 minutes matters. So yeah, we're back to a volatile market.
Yeah.
Is it fun? No, absolutely not.
So I want to be like honest about a couple scenarios that I have right now for people that are listening. I have 3 borrowers in particular that are floating their rates right now. And it's very challenging for me to give them the right advice. Like they know that they're floating, but then you get in this area where you're chasing, and you know what it's like to be chasing. Like
Yeah.
it's like you lost the pricing that you had. You don't have it anymore. Okay, it'll come back tomorrow, and then tomorrow's worse, and then the next day's worse, and then you get a reprice for the worst that next day, and the next thing you know, you have like 6 days worth of negative reprices, and you're not even close to where you were, and it's just, and again, then you're just chasing, and you're hoping for a miracle, and it's just not a fun place to be.
So when does this end? Where does it go from here? So I guess maybe the war ends, crude settles down, the pricing starts going back down, and then organically it's going to start pushing mortgage rates back down. A little bit of the fear too with this is inflation again, right? So oil goes up, the cost of delivering goods goes up, and then you're just worrying about the consumer's, wallet. It's the cost of everything going up. So that's inflationary stuff, guys. Mortgage-backed securities do not like it. Here we are. Interest rates are going up.
Yeah. And another thing that happened this week was the Federal Reserve met to decide on what they do with interest rates.
Yeah.
And they decided not to lower rates. Not that anyone was expecting it, but it was around the time that hotter than expected inflation report came out. And they decided not to cut rates. They make a statement, talk about the inflation, stuff that we already know is going on because of the oil prices. But it's just even those type of scenarios where in the past where the Fed doesn't lower rates is just whatever. The market expected that, but in this case, the market had a negative reaction just to them not doing that and the statements that they had. So, they'll revisit it next month, but that was just another bummer to see.
So when I was a kid in this industry, I learned from Frank Watson. He was the owner of Lenders Network, where I cut my teeth. He used to say to me, Bedard, slow to heal, quick to bleed, as far as pricing is concerned. So man, oh man, it is quick to bleed right now.
Yeah. So if you're listening to this and you don't have an idea on what's happened with rates, we were generally in the upper 5s 3 weeks ago, and now we're in the mid 6s, which is freaking crazy. But that's what it is, and there's still people I talk to every day, and I'd be interested on how it goes for you, but there's still people that I talk to that do think rates are in the upper 5s and are surprised to hear how much rates have gone up. But that's the reality of the situation. Like, we're not trying to pull a fast one on you. Just rates have gone up, and it's been challenging for people.
I think some of the mechanics of that too is like just the advertising of rates. Everybody advertising rates always puts the shiny rate on there that has 3 points attached to it. You're not really paying attention to that APR. So when you're calling us, you think rates haven't moved, but really it's just a little bit of trick in the marketing to show a lower interest rate. It's not the case, man. They're up.
Yeah. So please know that. I mentioned a few weeks ago that we were talking refis with people, and I actually had a couple close this week, and I think I got a couple more next week. Those people were managing or managed to lock in their rate at the right time, which is great. But I actually have a whole bunch that did not. And we weren't quite ready to lock at the time on any of them. But what I've been trying to do with people, and I'd be interested in your thoughts, is just have the conversation around what their rate needs to be in order for them to take action, take their loan application, go through the process with them, and then just be ready when rates get to where they need to be. So I actually have a whole bunch of people that are we have submitted loan applications, approved loan applications. A lot of them have appraisal waivers, and we are ready to lock when the rate gets where we need it to. It's not there, and it probably won't be there for a couple months. But I think it's smart to do with people that are refinancing to set those expectations and get them ready to go.
I think it's great, though, that you actually snuck some in. I got some in also, but I didn't get nearly as much as I wanted to. It's actually a really... the psychosis of a borrower, right? It's always the interest rate is 6%. They want 5.750. It's really, really hard sometimes too to get people to pull the trigger. So yeah, I'm sitting on a bunch myself.
Mhm.
Um, and actually, a lot of those conversations, to reiterate it, is just I'm always fascinated by like just chasing something lower when it's actually already in the spot that it's going to help you. I've had a lot of that recently.
I have too. And we talked about it on previous podcasts where, I have had people in the past that have $700 a month worth of savings, but they just want that 1/8 to save $40 a month more. And it's like, how long are you gonna chase that eighth? You gonna chase that for 6 months while you're leaving $700 a month worth of savings on the table for 7 months just to chase $40 a month more? It's like, it's hard to get people to be okay with where things are at and stop them from wanting more. I think it's just human nature, but it
I
is a
think so.
balancing act.
It's definitely a balance and act. Sorry to cut you off, but like I think some of the stuff too that I was dealing with is like numbers, 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 numbers. Hey, Chris, just as a heads up, we're all also shopping other lenders, and it's like you know how it is when you're shopping or the consumer's shopping you.
Mhm.
They could make 800 calls, and eventually you're going to find somebody that's lower than us. It's
Totally.
just yeah.
It's a weird thing because at what point do you value the effort, the communication, the staying in touch on the rates, the making the process easy, the being local, being someone that you can call when you have an issue? I agree, dude. If you look online, you'll find someone cheaper. You'll find Bank of Missouri or something like that, or some bank out in the Midwest that can do something online. Like you can always find an eighth lower. And if you kept looking beyond that, you probably find someone an eighth lower there too. So it's just at what point do you value the relationship and having a person you can reach out to whenever you need that's local.
And when I do lose these transactions, what I hate to know, and I know this is happening, is that they're being told one thing. And it's not like I'm just saying that because I lost the transaction. I know ultimately if I've lost due to interest rate, they're paying for it.
Mm-hmm.
They're paying for it. And it's like sometimes it's like, guys, come on. You paid a point on a $400,000 loan to lower the interest rate an eighth to save you $40. Like, do the math on that. It makes zero sense to do it.
I've had a ton of conversations about points in the past few years since rates got higher than they were in 2021. It's do the math every time. Break even point on points is between 3 and 4 years every time. So
Yes. Dude, national average of people turning over their mortgage is 3.4 years for whatever reason. Death,
yeah,
divorce.
and that assumes you take that additional savings that you're going to get and bank it. Like you're taking 4 grand out of your savings to lower your payment by $40 a month. What are you doing with that $40 a month? You're probably not replenishing your savings. You're probably just absorbing it into your monthly expenses. So it's like you just paid $4,000 for what?
And it goes in the area for me of like, how are you something for everybody? And
Mm-hmm.
it's impossible to be that person for
Yeah,
everybody. And it's just, sometimes your message is just not there with everybody. And those are the ones that actually get to me. Like I had one, it was for 4 days prior to the run up of rates, talking to me back and forth. I mean, this is a lot of discourse gone.
yeah,
Not even talking to me. No.
yeah. Yeah,
So
people are finicky, and that's fine. For anyone that's listening that's thinking about refinancing, like still reach out to us. It's clear listening to 13 minutes of the podcast that rates have gone up, but I don't think it's a bad idea to have these conversations with us so you can set those targets. So we say, hey, it's going to take me being back at 5.875 until I refinance again. Great, I'll be ready for you. And then we can watch and take action when rates get back down there. So definitely reach out to us if rates are not quite where you want them to be and you think they're far off. They'll get there eventually.
and I think I want to piggyback Randy with the thought of the economic data has been stale.
Mhm.
Like these reports coming through, good reporting means interest rates go up, bad reports or bad results within the report means interest rates go down. Right now, this war, inflationary pressures, it's putting upward pressure on rates. But I mean, as we continue to sort of see economic data stagnate, especially from the consumer side,
Jobs
I've
report was
been
not good. I think
no.
jobs report was bad with some even worse revisions for prior months. So like that stuff, I think stopped us on one day from getting even worse. Kind of offset some of the negative momentum against us. I mean, it's obviously gotten worse since then. But yeah, the other types of reports that we typically lean on outside of war related stuff were not good for mortgage. Like we're not good for the economy, but good for mortgage rates.
And additionally, is like you're starting to see the default numbers on credit cards at alarming figures, car lates,
Mm-hmm.
alarming figures. So like these little like not little consumer reports, these are actually major ones. it's really starting to show that the consumer is starting to lose. I don't know, man. They're just a lot of people are penny pinching right now. So organically, that means rates go down. So we'll get past this. We'll get past this war stuff, hopefully. And I think the upside is, keep communicating with us. It's going to get there.
Yeah. All right. Enough doom and gloom about rates and crying about rates like we've been doing for the past 15 minutes. Tell me something good. Anything good? Any good closings? Any good transactions that are worth mentioning that people might learn something from?
Transaction wise, I actually just like conversations lately. It seems like I've had some good meetings, new referrals coming in. But I guess some of the wins, and this is one that I think is pretty elementary for you and I, but like I've got a person that's a nurse. We've got some per diem stuff. We have some W-2 stuff. We have a history of being W-2'd and only being in this place and going to this place. Maybe somebody that was a rookie would just have seen this application and thought, I got to move on from this. There's too much crossover. 1099, W-2. I really grinded on this. I got a solid 2-year history. There was some gaps in there. Contracts come up. They sign new ones. They go to new hospitals, stuff like that. You and I do the grinding, I think.
Yeah.
That was a good one. I got that one approved.
Nice. Love that.
Yeah. Yeah.
I had a first-time home buyer close this morning, which is great. Always nice to help a first-time home buyer. Sharp kids that knew their stuff, good jobs, put some money down, and just closed on a nice home. So that's always nice to see. Also have someone else closing today, client that I've done. I think this will be the 4th or 5th loan I've done for them in the past like 10, 12 years, which is really cool. A gift of equity scenario where they're buying from a family member and the family member is giving them money, but it's kind of all on paper. And it's a good scenario where they don't have to bring any money to closing because it's all being gifted from the family member. And just a nice, easy transaction. Just everything's a little bit different. Everything's has their challenges to it that you have to overcome. But ultimately, we do a pretty good job of fighting through all those things and getting to the closing table.
Another one actually that I like is RD. You never do RD anymore, right?
Yep.
I snuck an RD one in, just got a clear to close. I actually stacked it with Main State Housing, so you get the interest rate benefit. They got $5,000 towards closing costs, and just as a reminder for people, borrowers need to put 1% of their own funds into it. So this person's going to buy a house next week with, I think they only had to use $3,200, which is great.
Yeah, and then you get the $5,000 credit and the great rate. So it's a great one. Super underutilized, but good work on that. As far as specific products to talk about outside of like recent closings that we had, there's a couple things that I wanted to bring up, if that's cool with you. And then I'm happy to have you jump in with whatever you want. But I think we might have talked about it on a couple podcasts ago that it was coming, but we officially have like the medical professional loan, which is for doctors, nurses, people with certain education level in that field. And you can do 100% financing with no PMI. And you hear about some of these programs at local banks or different lenders across the country. Now we have something that can compete with that. So it's something that we should be spreading the word on.
Up to $2 million too, loan amounts, fixed product, ARM options. I was going through the matrices. It's pretty nice. Yeah. This is a pretty competitive doctor loan.
And you get to exclude some of the school loan scenario stuff, which is usually debilitating for these people, with the amount of school that they have to borrow for hundreds and hundreds of thousands of dollars that add up to thousands of dollars on monthly payment each month. That really affects generally what people can afford. But with this type of loan, you can exclude some of that stuff and make it a little bit easier. So you hear about doctor loans, you are a doctor, someone in that field, reach out. We can hook it up. Other thing, I mentioned this to you, Beds, but I don't think you had any awareness of it, but was the spec house financing that we do?
Yes. Teach me about this.
We have a team that does spec house financing, that does like builder construction financing, and they've been pretty great for me to deal with. I have some phone calls lined up with some builders with them, so we can kind of talk about what CMG can offer to them. But basically, we'll lend up to 90% of the cost to build any of these homes. So it's just another form of financing, so they don't have to worry about credit lines at their bank or hard money if they were doing anything like that. This is just a way for us to fund a project at pretty favorable terms, is my understanding, compared to what many banks are offering. Definitely better than hard money. So I guess if you're someone that builds spec homes, that you have to have a history of doing at least 3 spec homes to be able to work with us, or if you're a builder that just builds houses. Just think of builders that you've worked with locally. I don't want to throw any specific names out there, but we know all of them. Like, we could finance a whole subdivision for them, and at 90% of the cost of each building. So it's a pretty cool thing that I'm trying to spread the word on more.
Smart. Good move.
Yeah. So those are the two main programs. I don't know if you had any other loan programs that you wanted to mention.
Actually, no. I guess the W with the RD stacked with Misha is pretty nice, but that's going to be reiterating it.
Yeah.
I always just like to tell people we have over 980 mortgage products. Impossible for us to know every single one of them, but if you have a scenario, just hit us. Our scenario desk is really quick. They respond with product options for everybody's scenario.
Yeah. I told the same thing to someone today where it's like, if you don't know if we do it, ask us. Well, I'll get you an answer. We probably have a solution for it. So keep that in mind. But
Good stuff, buddy. What else?
that's it for me, dude. You want a pickleball update? What do you want? Like anything else? Any little fun stuff? Nothing else?
I ran into your mom yesterday at Deli and Company,
Yeah.
and she listened to our sports podcast, and she was talking to us a little bit about the pickleball scenario with the Saco boys.
Yeah.
She just kind of casually mentioned to me, "Come on, you guys need to start beating the Saco boys
Hey.
more." So
We're moving in that direction. 2 more wins last week, right? This week. Yeah, this week. So
this week, convincing wins too.
convincing wins, demoralizing wins for them. I think I saw maybe some tears on the other side by the time we left.
I got a text from Dupery telling me how tired he was towards the tail end, not related to the losses to us. So I'm like, all right, that was cool. Dupery built in a little bit of a buffer there.
Yeah, all right, dude. You're tired. Me too. I was tired too. But we still kicked your butt at the end. But yeah, man, that's it.
That's it, man. Thanks to everybody for listening. Sorry it was gloom and doom today. You know how it goes, though. Next month, it's probably going to be amazing.
Yeah, we'll keep you posted. Thanks for listening.